Hello, future investors. We're Group 4, and today we're going to tell you why Keysight Technologies should be your next investment. First, I'm going to give a brief overview of Keysight Technologies. So Keysight Technologies is an industry leader in test and measurement equipment, providing a wide variety of hardware and software products and services in many industries. Keysight strives for technology leadership as a competitive differentiator. Their objective is to increase the productivity of customers and reduce their customers' time to market so they can deploy their products to address rapidly evolving new technologies and market opportunities. Keysight has almost 50,000 customers and has more than 13,000 employees worldwide. Keysight Technologies began as the electronic test and measurement division of HP and then Agilent and has been an independent company since 2014. Keysight Technologies provides products and services to a wide range of industries, including commercial communications, aerospace, automotive energy, and general electronics, among others. The following strategies help Keysight Technologies to maintain their status as an industry leader. First, Keysight commits to consistent expansion of their software portfolio. They're in the early development stages of a new software platform called Pathwave, which will integrate Keysight's portfolio of software solutions. Pathwave is being designed to be the primary foundation for Keysight's solutions in the future and will contribute to their future growth. Next, Keysight strives to provide complete solutions for their customers, including customization and optimization, to consistently be their customers' first choice. Another critical aspect of Keysight's strategy is its early investments to achieve first-to-market solutions. For example, Keysight is making early investments into the development of new wireless communication test solutions to meet demand and growth in mobile data and wireless standards, including 5G. Keysight is making further investments into the development of new automotive test solutions, including vehicle intelligence, connectivity, power, and security, to keep up with the growth of electric and hybrid vehicles. Finally, Keysight's strategy includes developing solutions for network transformation. This involves strategic acquisitions for growth and development. Keysight Technologies participates in strategic acquisitions to expand their technical breadth and expand their accessible market. The chart shown here depicts Keysight's growth regarding their technology and available solutions as a result of their acquisitions. For example, the acquisition of Ixia established Keysight as a market leader in new network test and network visibility solutions.
While the largest asset in Keysight's books is cash, their most significant asset is actually their human capital. Keysight's custom solutions attempt to give their customers a comparative advantage by increasing their productivity and reducing their time to market. In the race to be the first to market, it is imperative for Keysight to hire top-of-the-line scientists and engineers for research and development. The minds of Keysight's employees hold a wealth of knowledge and are key for driving innovation in the company. In addition, Keysight offers customization, optimization, and maintenance services on their products and custom solutions. Having trusted and competent employees working with customers helps increase customer retention. Even the best plans of action would be ineffective without the right people in place.
Next, I'll dive into a ratio analysis of Keysight Technologies. First, we chose the cash ratio because it is the most conservative liquidity ratio, only allowing for the most liquid assets. Keysight has a high cash ratio largely due to high amounts of cash equivalents in the form of short-term deposits in global institutions. Since Keysight is a global company, they must ensure that there is always cash available for their working capital needs in any location. Keysight's leverage ratio has had an overall downward trend since 2017, a positive sign that Keysight is slowly financing assets more with equity rather than with debt, and that they will continue to maintain a solid solvency position. Keysight's gross profit margin has increased substantially over the 3 years shown, indicating that revenue is growing at a faster rate than its cost of goods sold. From this, investors can reasonably assume that Keysight will continue to remain profitable. Keysight's operating return on assets was low in 2017 and 2018, but made a drastic jump up to almost 16% in 2019. This shows that Keysight is earning far more return from their core operating assets. Return on research capital is an important ratio for Keysight, as they make large investments into R&D as part of their strategy to be a market leader. A return on research capital of 4.06 in 2019 shows that Keysight earns a $4 return on each dollar invested into R&D. Finally, Keysight has a disturbing negative interest coverage ratio in 2018. This is due to a large non-recurring impairment of goodwill. Keysight's interest coverage ratio recovered well in 2019, showing that Keysight has the ability to cover its interest payments on debt 9 times over.
Keysight's cash ratio is much higher than Teledyne's for all 3 years, meaning Keysight is much more capable in covering its current liabilities with cash. Keysight's leverage ratio is also much higher than Teledyne's for all 3 years. While this might suggest that Keysight is riskier than Teledyne, having a high cash ratio and high interest coverage ratio provides much reassurance to Keysight's ability to pay off what they borrow. Keysight's gross profit margin is consistently greater than Teledyne's. This metric is particularly noteworthy because Teledyne and Keysight have similar levels of expenses each year, but Keysight is able to generate much more revenue. Teledyne's operating return on assets is greater than Keysight's. However, Keysight has shown tremendous growth over the last 3 years, while Teledyne's growth rate remains relatively stagnant. Based on the yearly changes, it is not unlikely that Keysight will soon overtake Teledyne in this respect. Lastly, Teledyne's return on research capital is greater than that of Keysight for all 3 years. Although the numbers suggest that Teledyne is able to generate more profit for each dollar spent in research capital, there are some important details to consider with this ratio. First off, Keysight spends 2 to 3 times the amount that Teledyne does on research and development. Second, return on research capital only takes into account current year gross profit and prior year research and development expense. In practice, the benefits of research and development are often realized over the course of several years as opposed to just the next year. Over the last 2 years, Keysight has been developing a new dynamic software program called Pathwave. Pathwave is expected to become the foundation for many future Keysight solutions. Even with such a huge project in the works, Keysight is still making a decent return on research capital. As Pathwave continues to develop, Keysight will be poised to reap more and more benefits from their investment in research and development.
Two unique line items of Keysight are research and development expenditure and retirement and post-retirement benefits. Keysight's income statement shows the company incurred research and development expenditure of $688 million in 2019. In comparison, our competitor Teledyne Technologies has only $209 million in year 2019. And it shows no sufficient resources to fund all research and development in their financial notes. Keysight has achieved growth through investment in research and development to produce quality products. For instance, the company was awarded the 2014 Global Frost Sullivan Prize for achieving market leadership by revenue in the instrumentation software sector. Such a business model helps the company generate high revenues and had a huge growth in its available cash. Keysight Technologies' balance sheet for the 2019 shows 357 liabilities accrued to retirement and post-retirement benefits, and this represented $133 million growth from the previous year. These benefits include pension distributions as well as life insurance, medical plans, and other deferred compensation arrangements. In comparison, Teledyne Technologies does not report any such benefits in its balance sheet, but recorded $22 million of compensation liabilities and $56 million of life insurance in year 2019. Uncertainty in economic conditions and increased market competitions are two risk factors of Keysight. The ongoing COVID-19 highlighted this economic uncertainty and increased market competitions because customers have to adjust their spending habits. These uncertainties and competitions may bring about reduced demand for products and services and increased cancellation of orders. Economic uncertainty and increased market competitions have also increased price pressure for the company. Also, these conditions can negatively affect the future investment of Keysight. To manage these two risks, Keysight Technologies has invested in market research to analyze and predict future market demand, and therefore produce the correct services and products to their customers. Keysight also maintains the quality of their services and goods that guarantee competitive price. And also, to ensure quality is assured, Keysight Technologies has invested in the latest technology to provide effective solutions for the questions of their customers.
The company has been growing at a fast rate in recent years. Firstly, the company research and development in 5G taxing and measuring equipment that validates data rate has helped it to grow. Furthermore, the company has a framework for advanced analytics and taxing capability for device and network. It helps the company to grow at a fast rate. Also, the company was able to grow since it extended innovation branches in US, Germany, China, and Japan, which focus on the automotive sector. The company's capabilities to create and test new products as well as solutions that suit the evolving needs of customers, thus helping it to expand its customer service. Last, Keysight Technology Company combines several businesses to ensure the company offers the best solution to customers in all fields of hardware and software. For example, N9 was acquired in 2017, which helped the company to provide application and network solutions. A subsidiary of Tires Group was acquired in July 2018 in order to expand its software service. Eggplant was acquired, which allows it to expand its territories and provide the fast-T automotive. Keysight Company is expected to grow in future due to the heavy investment in 5G communication technology. The company is also expected to grow in future due to the acquisition of N9, Exia, and Prisma, which indicates that the company has a long-term strategy in place of 5G solution. Keysight Technology Management might plan to buy TextLeo mobile application testing company. This will help Keysight to expand its service to website testing and improve more on Android and iOS software testing. Also, the use of mobile phone, iPad, and tablet is increasing in the world today. Therefore, buying the TextLeo company will create more opportunity for the revenue to the company. For the signals of financial statement that can trigger positive future earnings, according to these figures, the statement triggers possible future earnings where the company hasn't recorded any potential bad debt cases. This affects company's liquidity position. If the company hasn't had any debt, then the liquidity position is good. Therefore, the company can meet its obligation when due. It's a positive approach to development of company structure.
First, I want to introduce what is CAPM, who uses CAPM, and how we apply CAPM on our investment decision on Keysight. So CAPM is called Capital Asset Pricing Model. It's a popular model that is widely used among the finance industry to describe the relationship between expected return and risk of investing in a security. To apply CAPM, the formula has two components. The first part is risk-free rate, and the second part is multiplying beta to market risk premium to get to the expected return of a security. Risk-free rate is a theoretical number representing the expected return on an investment that carry no risk. So we use the 10 years Treasury bond rate, which currently sits at 0.7% because Treasury bonds are backed by the US government and are considered the safest investment. Regarding beta, which measures the volatility of its share price when comparing to the overall market as a whole, according to Finbox, an investment researching tool, Keysight's beta is currently at 1.06, where its competitor Itron and National Instruction Corp are at 1.19 and 1 respectively. This is basically telling us that Keysight is less volatile than Itron but more volatile than National Instrument Corporation. Based on our calculation on the slides, expected return of investing in Keysight would equals to around 7.59%.
There are three important measures that influence our forecast. First of all, the annual revenue growth rate is forecasted to increasing from 4 to 6%. To put the numbers into perspective, Keysight Technologies for the past 4 years have achieved an 11% compounded annual growth rate. However, CEO Ron Nersessian has stated that a sustainable and achievable long-term growth rate for the company is in the range of 4 to 6%. Secondly, the gross margin is forecasted to improving from 51 to 61% of net revenue. And finally, the operating margin is forecasted to improving from 13 to 16% of net revenue. These two measures, similar to the revenue growth rate, are not guesses. They are stated targets set by CEO Ron Nersessian and his team, and the company had not yet failed to deliver on similar past promises. These assumptions result in a total present value estimate for the company of $22 billion.
The share price can be calculated through the calculation of cash flow to the firm. Based on the current information, the free cash flow the firm for the next 5 years is calculated. For example, the expected net income in 2020 is $1,501 million. The net income for 2021 is $1,245 million. and the net income for 2024 will be 2080 million. After 2024, assuming that the firm is able to generate an annual growth of 4% per year, the growth rate is the average growth rate for the next 5 years from 2020 to 2024. In addition, when doing the forecasting, it is difficult to calculate the free cash flow to the firm. Based on the similar assumptions that are made on the calculation of keysight technologies, the share price forecasting method is taken against to calculate the share price of the competitors, including Unritsu and National Instruments. The net income calculation is based on the results shown in the previous part. Each year, the firm needs to spend on investing and financing activities, so assume that the net cash flow to the investing and financing activity is 280 million in 2020, and the net cash flow will change with the fluctuation of net income each year. The annual growth rate is 4% and the discount rate is 7.29%. The forecasted share price is $105.55 and the current share price is $99.4. If the assumptions are reasonable and correct, the share is undervalued by $6.18 per share. The similar calculation and assumption are used to calculate the share price of Unritsu. The growth rate, discount rate, and the percentage of cash spent on investing and financing activities are the same to make it comparable with keysight technologies. The forecasted share price is $13.92 and the current share price is $21.66. If the assumptions are reasonable and correct, the share is overvalued by $7.75 per share.
Technologie is another main competitor of keysight technologies. In 2019, the net income is $402.3 million. Following the same assumption, it is predicted that the net income of technologie is $422.42 million in 2021, and $443.54 in 2022, and $489 in 2023. The current price is $328.44, which is 10.37 higher than the predicted value. According to my calculations, the stock price seems fairly valued. It's standing around 5.85% below the intrinsic value. Basically, if you want to buy keysight technologies stock today, you will be paying a fair price for it, and you could sell it for more in the future, since the stock's price is increasing each year. We can definitely see that keysight technologies' share price can rise higher in the next months. That is another positive chance and another reason to buy it. This is all based on the data from the previous table. That is a positive point and a good indicator for how much the stock changes relatively according to the rest of the market. If you are an investor that is looking to grow his portfolio, you may be interested in the growth that keysight technology has occurred during the past years. Buying shares from a great company with a robust outlook at a cheap price is an interesting investment that no one will want to miss.